Hello, welcome. This is Roger Royce, host of the 10,000 Startups podcast. Hot off the presses, the Pitchbook US VC valuations report is out, and it's sort of a mixed bag. There's some interesting news in this, and you can find this on the pitchbook.com website. But let's take a quick look at a couple of things I wanted to just mention. Some of the high points here. There were some right points if you're seed or pre-seed. You'll notice that the median pre-seed value has hit nearly $1 million. If you see this chart, you can see that Q1 2024 for seed and pre-seed deal value has actually gone up and gone up pretty significantly. So that's good. In fact, it's at the deal value is at the highest level to date, according to Pitchbook. The seed valuation stayed at $12 million. That's median seed valuation. You can see on the graph there, it's dropped a little bit from Q3 of 2023, but nevertheless, pretty consistently at the median. But here's interesting: investors are taking a little larger stakes, up to roughly 25% at the seed level. Here's an interesting stat. Seed stage companies are getting older. They're all getting older, right? It's taken 3 years to get seed funding for these companies to close, 5 years to Series A, 6 years to Series B. There was a time in this valley that was a lifetime, but now it seems it's just taking longer. Interestingly, valuations have jumped back up at the early stage. Take a look at this graph. We saw a big drop in early stage valuations in 2023, but you can see that they've recovered in 2024, at least Q1 they've recovered. So valuations have come back up. Late stage valuations have had a really big increase. A couple of other interesting things that came out of this. Artificial intelligence has just really separated itself. It's pulled away from the pack. You can see that's the blue line in the chart, and it's on an upward trajectory while everything else seems to be going downward. It's also, except maybe fintech. So AI is still hot in Q1 2024 in terms of investment. And then finally, when we get to the venture deals themselves, the Pitchbook data has some sector specific data, but CVC deal participation is a high. The deal count participation has been falling, but more importantly is just fewer IPOs. Okay, so a little less liquidity. And this is what I was trying to get to, is the exits are showing slower returns in Q1 2024. So it's probably due to high cost of capital yet. We'll see if that turns around. And finally, I like this is the most interesting slide in the deck is towards the end. The VC market has turned to the most investor friendly in over a decade. What do they mean by investor friendly? Well, one, valuation, of course, but more importantly, flat and down rounds. Highest point in over a decade. Look at this chart. Down rounds, that's where your financing round is at a lower valuation than the previous one. Flat is when it didn't change. Highest in a decade. So that's good for VCs. And down rounds is a proportion of all VC deals. Look at that. In 2024, it's at 17%. It's gone up sharply. So we're seeing a lot more down rounds than we used to. And then finally, the last thing I'll mention is there was a time when you saw participating preferred stock in a lot of deals. That's just steadily decreased and decreased and decreased, so it's almost never. But you'll see that it's kind of hanging in there at around 9% of all deals are going to have participating preferred. No doubt subject to caps, but nevertheless participating preferred. So that is the Pitchbook Private Markets Venture Capital Valuation Report, Q1 2024. Roger Royce, 10,000 Startups podcast. Thanks.